Kunal, coming to you first, what's standing out to you today on the charts and what are your calls for our viewers?
Morning, Varun. It's an interesting market because yesterday the first half of the market was, a bit more topsy-turvy, I would say, up and down movement for the indices. We managed to see some late hour recovery in the markets today, in markets yesterday, and that has probably played some good effect to the markets today. Even though the S6 50 was down some 45-50 points plus, but we still opened with a mild bit of a gap up. So that's the tone of the market, that we are now consolidating at this 15,000 15,100 kind of a zone on the Nifty, and closer to 35,800 36,000 on the Bank Nifty. Now, whenever the markets generally consolidate, and if you look at the texture in the last 2-3 days, we are seeing more emphasis given towards the mid-cap names, and I think that's where the focus is now getting shifted gradually towards. So it's either the two set of themes. One is the underperformers, as well as the second is the mid-cap names, which have been on the verge of a breakout, but have been lying a bit low. So these are the kind of stocks and sectors which are moving up high. Now, keeping that backdrop, I will suggest a couple of buy calls, and the theme is specifically towards these kind of names. So first one which I'm suggesting is from the FMCG pack. It's a buy on Dabur. After almost 1 month, 1.5 odd month of a, I would say, downward drift, the stock coming back towards touching its major supports at 50-day moving average. I think the mean retracement process for Dabur seems to be getting over, and the stock should be in line of coming back to previous swing highs, if not beyond that as well. So it's an interesting short-term bet. Would term this is a low-risk trade, a buy on Dabur for a target of almost 550. Stoppers could be kept at 518. The second would be from the cement pack, and we've seen very strong patterns building up in the large cap cement name. Surprisingly, Ambuja Cement and ACC, they've gone a bit more sideways, and which is why I believe that when the markets would consolidate, you would probably get many of these names to try and come back and hit their previous swing highs and cross beyond that as well. So both of them have strong potential. Suggest a buy on Ambuja Cement for a positional target of almost 330, and stoppers could be kept at 250 levels.
All right, and those are the low risk and the moderate risk ideas coming in from Kunal this morning. So if you look at the risks ideas that Kunal has given, it's a low risk idea on Dabur, as well as moderate risk idea is Ambuja Cement. Vikas, good morning. What are your low risk and high risk ideas for our viewers this morning?
Good morning. As far as my ideas are concerned, they would be more of long-term wealth creation ideas. The first stock which I would like to recommend to investors today would be a CESC, Calcutta Electric Supply Corporation. It is the flagship company of the RP Sanjeev Goenka group. It's a major power producer in the eastern India. This company came out with its numbers for the December quarter, and they were pretty impressive. The company reported PAT of around 316 crores versus 249 crores, which it reported in December quarter of last year. And then also declared a special dividend of 45 rupees. Fundamentals look pretty solid. It trades at pretty reasonable valuations of close to 7. The price earnings multiple would be close to 7. And then the company had grown decently. They've shown a CAGR of 26% in their PAT over the last 3 years. So I'm bullish on the stock from a medium to long-term point of view, and I think one should be buying into the stock at the current levels of around 625. My targets are 800 rupees in the next 9 to 12 months. The second stock which I would like to recommend today is again a very strong company fundamentally. The name of the stock is DCM Shriram. It's also a company from the Shriram group, which is normally recognized as a sugar manufacturer, but it does have several other businesses like fertilizers, crop care, agri-chemicals. They do have a cement plant also in Kota. This company has pretty solid fundamentals. They also reported pretty good set of numbers for the December quarter. And if you look at their fundamentals, the debt equity ratio would be close to only 0.5, return on equity at 18%, return on capital employed at 20%. So I like the stock at the current levels of around 465, and I think we could see levels of 575 rupees on the stock in the next 1 year or so.